Welcome to Studio 17, coming from the heart of downtown Pensacola, right here at Florida Insurance Agency. This is where real estate, mortgages, and local business come together. Each episode, we sit down with trusted professionals, community leaders to talk about what's happening right now, from housing and lending to risk, protection, and smart financial decisions. Whether you're buying a home, growing a business, or want a real conversation with real experts, we are in the right place. Let's get started. Well, today we have Reliance Mortgage with Kaila. And we want to sit down and talk a little bit specifically about Reliance and how long Reliance has been in business and specialties about your program. Talk a little bit about community involvement and try to give some advices to a lot of new buyers or maybe some existing homeowners on specific programs that Reliance have.
I would love to. My name's Kaila Parker with Reliance Mortgage. Reliance Mortgage itself is locally owned and operated. Jen McEwen has been a local lender here for close to 30 years. Yeah. She actually got started with Navy Federal, which everyone is familiar with. And somewhere along the way was like, hey, I can do this for myself. And so she launched a local lending company, and now we are Reliance Mortgage. And so she's been in the business a long time and had a lot of success. I'm incredibly happy to be part of her team. We also have two other loan officers that have been in the business over 20 years as well in our area, Jessica Bishop and Donna Smith. So we are a power team of women. Not to say we won't ever add a man, but right now we've got our power team of loan officers, and we all happen to be women. So we have a lot of fun.
Sure. You mentioned Donna Smith.
Yes.
When did you join your team?
Today.
Wow. So fresh out the press.
Fresh on the press. We'll be announcing her, this week.
Oh,
so,
we dealt with Donna for a long time. She's great as well.
Yeah,
yes,
so cat's out of the bag. We are so excited to have her on our team. And so it's a dream team of power women.
Oh, absolutely. Yes, ma'am. Yes, ma'am. So the whole idea about the show is we want to basically give a little bit of, I don't want to say education to our clients, but guide them a little bit on the process of buying a home. Whenever you're buying a house, a lot of clients, that's mainly probably their biggest investment in their lifetime.
Oh,
right?
100%.
And it's a lot of how do you say? It's a big value. It's a big amount. It's not a vehicle or anything. You're buying a big asset.
Yeah.
And there's a lot of decision to be made. And there's different programs, different verbiage that a lot of industry people use. And if I am a regular person that never dealt with that, it can be intimidating sometimes. And do you want to talk a little bit on some kind of the program that you guys deal with?
Yeah, absolutely. So the biggest thing is affordability. So when I get an application, oftentimes if somebody doesn't give me they don't say, I'm looking at a particular home and it's listed at this price. They're just getting general information. I'm starting with education. And to your point, it is our biggest asset. If you think about your monthly bills and you look at the spread of where your dollars go, roughly on average, 42% of everyone's money. So if you look at 100% of the money they make in a month, 42% is going to that mortgage. So almost half of your money is going to your mortgage. So we take that very seriously. And I think affordability is key. This may be your forever home. It may not be, but it doesn't matter where you're at in your life. That monthly payment is going to make an impact every single month. And so we need to make sure that we not just qualify you, but get you into a payment that you're comfortable with. And some people think that it's all about the payment and that sets the price of the home. But when you have a good lender and a good realtor and they partner together, we can actually get you a little bit more than you think you can qualify for and make it more affordable than, say, the cheaper home. And so I like to really expand everyone's knowledge. You mentioned being a guide. Yes, let me find out what your goals are and what home you're looking to get into so I can look and see how, do we need to be extra strategic in our negotiations to get you in something that you're going to be happy in for a long time or whatever that time frame and goal that you have in mind is. And so we always start with education.
Sure. So for the listeners right now, one question that came up is, how is the market doing? What's the mortgage climate like going to be in 2026?
Yeah, we had a lot of mortgage news in 2025, right?
Correct.
And what's kind of funny about it, because I do what's called a no fluff market update, which I just try to like make it super simple
Sure.
and just say, here's what the layman's terms, what you need to know. And here's,
You know, to your point, we're all guilty for that. Like, whenever you're in the industry, you start using a lot of these words, right?
Yes.
It's probably second nature to us. But whenever you're talking to somebody that doesn't deal with it every day, what is PMI? What is FHA? What is a conventional loan? For us, like, I mean, I'm talking mortgage,
Right.
but for me on the insurance, also the same kind of thing. Sometimes I have to pause or even talk to some of my employees. We are the professionals. We cannot talk to a client with, these verbiage. Sometimes a lot of educated clients, they can pick it up or they can do their own research before they talk to you. And right now, all of the data is so abundant online. So we're starting to see a little bit more educated clients out, even before they reach out to us. But, again, I don't want to steal your thunder from explaining all of the different programs that you guys have. But to your point, we have sometimes to feel like we have to step back a little bit and talk like you're talking to somebody that doesn't know anything about the industry.
absolutely. And that's why, like, you asked that question, and I'm like, it all comes down to affordability and what are your goals? And everyone can answer that question.
Sure.
What payment am I comfortable with? Because most people already have rent. So they go, well, I'm comfortable paying my rent. And so we could start at your rent payment. And then same when it comes to just the education process on what are your goals? Is this your long-term home? Or are you knowing that this is your first home, but certainly not your dream home? And this is a stepping stone. And that really helps me make sure that you're taking the right steps forward to put you in the best financial future in hopes that you come back to me, because we are, I'm in Pensacola. I can work with anyone in the state of Alabama or anyone in the state of Florida, but most of my business is right here. People can walk in my door, bring me documents. And so I want to build that long-term relationship, and to help you build wealth. That's the best way that I can build that long-term relationship. So I always start with very simple terms. So talking about the market.
Sure.
Okay. So lots of stuff in the news, scary things. This was my big thing for 2025. If the economy is bad, interest rates are good. And so everybody's like, interest rates are bad. And historically, they're not. They're actually very normal. Sure. They've been normal. They've been, right now, they're very normalized if you look at historical, but they're bad compared to COVID. Well, COVID wasn't good. That's why we had good rates.
Correct.
So let's all just reframe our mind and go, I'm in a normal market. I'm getting a normal rate, and I can work with great partners who can help me negotiate a better rate for today's climate. That's all that we really need to understand, is that I'm not getting a bad rate. I'm getting a very normal rate. And if you were to ask any mortgage professional, I'd love to tell you they're going to drop another point. And I don't think that's the case. We think we're going to see a very stable market over the next year. Interest rates can fluctuate daily, but we're talking very minuscule fluctuations. Sure. So nothing significant enough. Now, if you are in a very good situation, I do have a product that I don't compete on rate. Historically, this loan program was founded in 2005 by our founder. So Reliance Mortgage is partnered with one of the top 5 lenders in the nation, CMG Home Loans. They're the people who actually give you the money, right?
Sure.
And so this was founded in 2005, weathered our worst financial crisis in 2007, 2008, and has never had a foreclosure in 20 years.
Wow.
Yeah, it's the most impressive stat, I think, in the mortgage industry. And our clients achieve a 2 to 3% effective rate with this loan. And so when we get to that point, whether it be in your home ownership journey where you've acquired enough equity and assets to qualify for this loan, or even on the buy side, you've got enough assets and cash to make this transaction happen and qualify for this loan, I love to take the time to educate my clients on this and put them in what I consider the best mortgage in the business, which is the all-in-one loan.
Well, I guess we're probably not going to dive too much into it in this episode, but next time, this the whole show will be in that regard, because before we went on air, you wanted to talk about it, and it is, it can be a whole episode by itself.
Oh,
So,
absolutely. Yeah. The biggest thing in the market, though, is when people really ask me that question, they don't really want to know what's going on in
Sure.
the market. They want to know what rates are doing.
correct.
Short answer, they're stabilized. We don't project in our crystal ball that there's going to be a lot of fluctuation.
Sure.
And so the next question is, if rate is your big hang up, let's take a look at your financial situation and see if we can get you in a product that doesn't compete on rate.
Okay.
And yeah, we'll spend a lot more time on the all-in-one loan in a future episode.
Yeah,
I'd love
excited.
to.
Honestly, I was browsing your social media platform, and you mentioned that program. I was like, wow, I've never heard of it. And I've been in the insurance industry for 22 or 20 plus years. And, we deal with a lot of different lenders, right? And they all try to explain to us the different programs. Never heard of it.
Mm-hmm.
So I was very intrigued. And that's why, I'm like, let's just have an episode specifically about that program.
Yeah, and that's the biggest thing is education. So everyone's busy. It doesn't matter if you're in our industry, in the insurance, lending, real estate, all of our clients are busy. We've
Right.
got work, we've got life. And so why don't more people know about this? Well, I think it's just right now we're inundated with information.
Correct.
But beforehand, information moves slower. And so when do you find the time to be educated on products like this, or really understand what your insurance page means,
Correct.
even though it does impact you? We're just time is the biggest commodity. It's the hardest thing to
Correct.
find. And so that's really why most people haven't heard of this, is just it's just a matter of having enough time to be educated on it. And unfortunately on us, one of the biggest challenges we have is when we get an application, sometimes it could be the 9th that they're submitting an offer on a home.
Yeah.
And that is like the last time that you want to be getting qualified for a home. If we could establish a relationship prior to you writing an offer, that will help you feel more confident going into the offer and give you the time to get educated on what's the right loan product for you. We do last minute stuff all the time. That's how life works. But if we had more time on the front end, we could do a lot more education.
So, perfect way. Let's go back, step a little bit back, and then try to explain to somebody that is in the market right today, and then they're trying to start the process of looking for a house. What will be your recommendation? How many days ahead they need to start contacting their mortgage or maybe the realtor? Who handles that? Does the realtor tell them, give them a timeline? They should have their own timeline. There's a lot of different questions that comes up.
Yeah,
what will be your expertise?
So I say whether it's a real estate agent or a lender, we work on your timeline. And if anyone tells you different, that's fine. But I believe the best professionals work on your timeline. Now, here's where we can help you with a timeline, is educating you on our process and how long it actually takes to find a home and close on a home. And then that helps you inform your timeline. But in general, if you say a month would be too soon, well, then we need to say, okay, well, the homes on the market today, some that you may like are not going to be there. You just have to be okay with that.
Sure.
And so first and foremost, we work on your timeline. Secondly, if you go to look for homes with your realtor, but you don't know what you can afford, you could be looking and being sold on things like yourself. You walk in, you see this beautiful kitchen and you've got 5 bedrooms, but you can't afford it. You're
Sure.
really going to get what's the word? It's not de-incentivized, but you're going to take the joy out of the home buying process.
Correct.
So let's put joy back into it and search within our budget. And that helps your realtor really hone in on what it is you're looking for and what you need. So I would say whether you start with the realtor or start with the lender, we need to be working together early on, all 3 of us, so the realtor knows what you can afford. And that's where we come in. And so I talked about affordability earlier, but I'll give you a story. I like to tell
Sure, yeah,
stories.
absolutely.
So I had a realtor actually call me and she said, hey, I gave your number to a client of mine. I was like, great, thank you so much.
Absolutely.
And so the client, promptly reached out. We connected. And what was funny about some of the stuff he said is, as I was educating him in our phone call, he goes, I heard that on TikTok.
Wow.
But it reinforced
Yeah.
that the person he was talking to on the phone what he heard online was matching. And so we were building trust. But he initially thought he wanted a conventional loan. And so a conventional loan, why did he want it? The biggest thing was he wanted to put 5% down, and he knew that the PMI, so the private mortgage insurance, would drop off with a conventional loan. This is going to be a long-term loan for him. And I came back after reviewing what he was buying, his financial credentials, etc., and I actually recommended the FHA loan. And he said, why? And I said, well, it actually comes down to your private mortgage insurance.
Correct.
So if we look at the rate you can get with the FHA loan, a little bit better than conventional because it's a guarantee. You've got that government insurance, so you get a little bit better rate.
Sure.
And then on top of that, his PMI was like $100 cheaper through FHA than the conventional. So I did the math on the difference in payment between the conventional and the FHA. And I just said, based on this time frame, the money you save every single month for, let's just call it 5 years, will more than pay for you to refinance in 5 years.
Wow.
And you'll be in a better equity position. He had mentioned some future things because I'm not going into any loan with the idea that you're going to refinance.
Sure.
However, knowing his goals and what the future looked like for him and his co-borrower, I could see that in their future. We actually have a rate rebound program. Biggest difference between our rate rebound program and our competitors, sure, nationwide lenders do this, is our time frame. So, for example, Rocket Mortgage, everyone knows about Rocket Mortgage. They do something similar, but theirs only extends to 3 years, whereas ours is from 6 months to 5 years. If you refinance with us, you not only don't pay lender fees, but you get a credit.
Oh, wow.
Yeah, so it saves you on your closing costs.
Oh, yeah.
So I just said, hey, we get you within this 5-year time frame. That's where I got my math on. Is
it the same as a recast or different?
It's different. So refinance is going to be a whole new loan. So the goal would be to get him out of that FHA loan and into a conventional product.
Sure.
And potentially drop the co-borrower. Okay. Because the co-borrower may have future plans, or sure, this may be an investment. There was just lots of different what ifs. And so I was like, well, listen, the monthly payment that you're saving over 5 years more than pays for the refinance. And this just makes sense to me. I said, but of course, you can go with a conventional loan. You qualify for both. I am educating you on what I would do based on what I know from the mortgage industry. Sure. And the FHA is a great product. So in this case, based on what you're telling me and what your future plans are, this might be a rental property, etc., I would go ahead with the FHA and save that amount per month, at least over the next 5 years. So why do I tell that story? It's all about education.
Correct.
And really taking the time to walk clients, not just through not just to say, hey, check done, you're pre-approved. Okay, realtor, go shop for this home. Hey, check done, you're pre-approved. But let me tell you why I suggest you put this amount down and you go with this product. Because I ran a couple of different scenarios. I took the time to do that. And if I were you, because I've bought, several homes and obviously in the lending industry, this is my recommendation.
Sure.
Now, it's always the buyer's choice.
Correct. Ultimately, they make the decision.
They do.
So you mentioned a couple things here, pre-approval.
Yes.
Can we, again, talking to a general person, they probably don't understand what we mean by getting a pre-approval letter.
Yeah, well, let's talk about the seller. So
sure,
you're going to buy a home. And the seller may be just getting one offer, but they may be getting 2, 3.
Sure.
And they're committing, whether it's one or multiple offers that they're negotiating between, they're going to take their home off the market. They're going to take eyes off the market, take time off the market in hopes that you buy their house.
Sure.
In hopes.
Wow.
And so we have to think about, from the seller's perspective, this is a big financial thing on their end too. They are probably going to buy another home. In most cases, the seller is probably moving or buying something else. There's a reason for them to sell. So it's important that they know and have confidence that the offer they receive will make it to the closing table. So the best document you can have to give the seller the confidence that you're going to move forward to the closing table is a pre-approval letter. So let's say I have cash, which obviously you wouldn't be working with me if you have cash. That just comes right out of your bank account. That would be called a proof of funds. So with a cash offer, the realtor submits a proof of funds.
Okay.
With a regular offer, they submit a pre-approval letter or a pre-qualification letter from the lender saying that, yes, Mr. and Mrs. Seller, this buyer, a lender has already looked at their finances, pulled their credit, and they do qualify to, purchase this home at this price.
Is there a difference between pre-qualification and pre-approved?
There is. So the difference is one is just trusting that the application is accurate. And of course, there's a lot of check boxes online that say...
Which one is that?
That's a pre-approval.
Pre-approval.
So it's like, yes, I promise I did not lie.
Sure.
And we run credit, but the pre-qualification is when you actually send in documentation.
So soft underwriting.
Yes.
Okay.
And actually, I got those mixed up. So pre-qual is just very quickly, like, let me look at everything. And on paper, looks good. Pre-approval is, I went through your documents and yes, you are employed. Yes, you make this much. Yes, you filed your taxes, that sort of thing. And so soft underwriting. Exactly.
Sure. So if I am a realtor and I'm represent the buyer, my first thing will be is let's team up with a lender and try to get you a pre-qualification letter that if we're submitting an offer, they take us seriously.
Yes. So I know a lot of realtors, and they are either on team, I do not show homes without a pre-approval or a pre-qualification letter, or I will show one home and I will not show a second or third or fourth until we get that letter. And depending on who you partner with, you may fall into one of those two camps. And that's because these realtors are professionals. They understand the seller's perspective, which is it's a lot to show your home, especially if you're currently living in it. And so we don't want to waste your time with looky-loos. So this eliminates looky-loos, a bunch of strangers coming through your home that may not have the financial means or credit score to purchase your home. And so it's really good to have a realtor. I can understand from the buyer's perspective, like they feel crunched for time. We talked about time being a big hurdle. But this is really a professional standard in the industry to protect the sellers and their time, and also to ensure that you're serious about moving forward.
And sometimes I think whenever you look on some listings online, it is a disclosure by the seller. We're only showing or will accept showings from a pre-qualified or pre-approved clients.
Yeah, I mean, this is their biggest asset, right? And so if we just let everyone through without knowing if they can qualify for the home, that's not the best situation. Now, you can go to any open house you want without, a pre-approval letter. But a lot of realtors I know in our local area do uphold this professional standard of only showing pre-approved buyers out of respect for the seller, but also just protection for everyone's time, effort, and energy.
Sure. Speaking about realtors, I felt like this is the perfect time to discuss. A lot of people think that Reliance only work with Levin Rinke.
Yeah, I have heard that.
Right.
I have heard that.
Do you want to go ahead and explain it?
Yeah, absolutely. So if anyone knows me personally, I was actually the COO at Levin Rinke Realty, and I have worked closely with Reliance Mortgage as a partner. Our realtors love working with Reliance Mortgage, but we have so many amazing realtor partners at every local brand, national brand in our local area. If you work with a realtor, we're going to work with them. And we even, I actually have friends in Tampa I helped, and their realtor was LPT.
Oh, nice.
So anywhere in this, we here locally are licensed in the state of Alabama and the state of Florida. So it doesn't matter what real estate company they work for, or even if a buyer is unrepresented. Let's say they're buying a for sale by owner, or they're just doing a refinance in which a realtor wouldn't be involved. We work with anyone. So what we don't do, we would refer you out for, let's say, a commercial loan. Let's say you wanted to buy a business, but anything residential, investment, stuff like that, we're working with you. So
let's clarify it. It's not just Levin Rinke.
It is
any realtor, any buyer out there, Reliance can help you.
Come see us.
Absolutely.
Yes.
Absolutely. So another thing I would like to, discuss, everybody think about hey, when should a buyer lock a rate, or should they lock a rate? Do you want to talk a little bit about that?
Absolutely. So that, I would say first and foremost, it's our job to provide you the education on when to lock the rate.
Sure.
And you had mentioned earlier, when should a buyer get started? And I kind of went down on, do you start with the realtor? Do you start with the lender? So let's just talk about an actual timeline. Okay. So if you apply today, we'll do a soft pull on your credit. Okay. So it's not a hard pull, which does matter to your score.
Correct.
And this is helpful, but we have to rerun credit every 90 days. So when you're getting the process started, and that's where the hard credit comes in. If I start with a soft check, yes, I can re-pull that again without it hurting your credit score. But if we do a hard pull initially, to me, like this was something I was always concerned about buying a home. I was like, do I want another hard pull in 90 days? So I would say one thing to ask your lender is, are you going to do a soft pull today or a hard pull today? Because that can really start that time frame.
Sure.
But anyone can go to freeannualcreditreport.com and pull their credit once per year. And this is better than going to, say, Credit Karma. So Credit Karma will show you a little bit higher than what what the lender is actually going to pull. So I would recommend going to freeannualcreditreport.com because that's going to be more accurate as to what the lender is pulling.
Okay.
And you can do that once per year. So when we talk about timelines, the difference between a soft pull and a hard pull, because we have to re-pull credit every 90 days.
Okay.
So if you're thinking about buying a home and want to discuss affordability, we have calculators for that. I can discuss affordability with you at any time.
Sure.
Whether you're 6 months out, a year out. If you're in a lease, we can strategically look at when your lease ends and backdate when you should get the home buying process started. Most buyers don't know that your first mortgage payment isn't due the very next month. So let's say they close this month in January. Anyone who closes this month is actually not going to have a mortgage payment until March.
Okay.
And so that...
I did not know that.
Yes. Yeah, so that can make a difference in when your lease ends, and it gives you time to move out. You don't feel like you have to close each deal at the same time. And so I may have missed your direct question there, but I wanted to talk about when people think about timelines, that's why you do want to get started early so we can help you strategically plan that, whether it be with a lease ending or a financial situation changing, jobs changing. That's the other thing. You want to be stable.
Okay. So let's say we submitted an application and you did the soft pull and everything looks good. And we say, okay, let's proceed. I submitted a contract. Now, at what point the client can get a rate and how long that rate is guaranteed for?
So when we're locking rates right now for 30 days.
Okay.
We aren't necessarily locking you in immediately if we're projecting that the rates will go down. But the other thing is that when you do lock with us, there's a certain time frame. If the rates adjust over 0.25%, we can actually float you down for free.
Okay.
So, when we call to get you locked in, we say, hey, this is going to be your rate. We've got you locked in for 30 days. So we're doing that on day 3. And then if the rate fluctuates down far enough, we're calling to say, hey, we're going to float you down. No one's going to say no to floating you down.
Correct.
We'll, of course, give you the disclosures, et cetera, but you don't have to be fearful of locking in because we've got that program. Now, we can do 45-day, 60-day locks. We try not to. It's more affordable for you to do a 30-day lock.
Sure. So when we say lock, that protects the client from the rate going up.
Correct.
But you mentioned it can float down. That means if the rate goes down by 0.25%, you can automatically slide them down to the lower interest rate.
Exactly.
That's great.
Yeah. So, hey, we want, like I said, we want you to refer us business. We want to treat you right. So we're going to always, and that's really any lender. No one, I would say in general, no one's out here wanting everyone to get the highest rate. We want people to be able to enjoy the benefits of home ownership. That's one thing I'll tell people. I'm never going to be out here selling you a mortgage because nobody wants a mortgage. Yeah, I don't care if you're rich or poor. Like, no one wants what we're selling. They need it, and we know that. So there's no reason to, gouge people. And there's a lot of federal regulations in place,
yeah.
like you understand with insurance. And that's why our industry is so heavily regulated. And that's important. And I appreciate that.
Yeah, absolutely. Absolutely. So we are running around the 30-minute break. One last thing. What one piece of advice you would give a listener who's nervous about buying a home right now? Should they wait? Should they go ahead and buy? Should they, I'm trying to basically...
I'm trying to kind of put it back to you in a question, because I would never be nervous about buying, but I understand a large portion of the population is. But I guess I would say, why are you so comfortable and confident renting?
Yeah, well, it's. I guess that you you watch the news, you hear about the news. Everybody is waiting, and when you hear that's the narrative that they're giving everybody, right? But I see that differently. I see a lot of closings, a lot of people still buying homes, but from the outside, when you hear all of that, people, well, you should wait, you should wait. Should you wait?
No. I don't think so, because especially in our local area, now I can't talk to every single market. But our local area is discovered, for better or worse. My husband does not like that. And you could argue pros and cons to either side. But this is a beautiful, award-winning beach. We're an incredibly affordable community. I do think our local wages need to catch up to that. But there's a lot of people moving into the area who come from more expensive places. Sure. And so it's kind of one of those things, like the train is moving. And so you can either jump on it and stay on it, or you can spend most of your time running to catch up. And that's how I feel about home ownership. It's about when is the right time to buy for you. What are your reasons for wanting to be a homeowner? There's a reason real estate has built the most wealthy individuals, in our country, and it is our biggest asset. And by waiting to buy, I actually have a tool for anybody who would like to reach out. I have a rent versus buy analysis. Okay. And it does a great job of showing you the power of building equity. And I've not ran one analysis to date. It'll actually tell you kind of the cost of home, or the cost savings, what your net result is. And
is that on your website somewhere, or
no? You
just
do have to run that through me.
Okay.
It's something I've got to run specifically.
Sure.
But the biggest thing is I'll ask people, I'll say, okay, here's your net gain by being a homeowner. Do you think the cost of ownership will cost you this much? And I say, if you had to put a new roof, new AC, I just go through the gamut. You had to rewire. And I've not ran one in which somebody said, yeah, I think even if I had to do all of that stuff, which I've never heard of anyone having to do that. Correct. It would cost me that much. And I said, so then the question is, yes, why would you wait? Why would you not feel confident in home ownership? And then we can have a deeper question as to what the real fear is. And it could just be around that financial insecurity. Sure. I can tell you though, if you qualify for a home, you're doing something right financially. Correct. And we can always help you there, help people with credit. If they have credit questions or they need to work on their credit, we do credit counseling. Oh, wow. Okay. And so we have down payment assistance programs. Not every lender does that. So helped a ton of people this year get into their home with $0, awesome. Walk away from the closing table with money. One of the things I love to do, just getting started, that's a big thing. And I've also helped a lot of people in their 50s and 60s buy their first home. So it's been, those are the things that's really rewarding. It is. That has to feel really good. Yeah. So that's why I wanted to share it. But yeah, if I'm ever wrong, I'll correct myself. I'm a big numbers nerd, educational nerd. And so I love bringing the education to the mortgage side. And so if any of your listeners ever have any questions, they can reach out anytime. Sure. And then what we'll do actually on the bottom of the screen, we'll put, do you want us to put Reliance number or your phone directly or your email address? And then we'll share that information with our viewers as well. Okay, perfect. Well, Kaila, we are actually coming on to 35 minutes. We will basically regroup next episode. Hopefully we'll have some more of your teammates as well. Yes. And then we'll dive in more on that specific program that you were talking. It's called All-in-One Loan. All-in-One Loan. Well, thank you so much for your time. I appreciate it. Yeah. And looking forward for next episode. Thank you. Me too.